Sniper in the room. How are you guys? Crypto peoples, glad to be back with you. Yes, so what are we going to be doing today? Exciting. We're going to do a quick retake of a real series of events that have taken place with Ethereum. Why? Because we might be at a key moment right now, and it's at inflection points. You want to have a look where you've been, how you've done, how you've transitioned, what's been the flow up until this point, why are we here now, and what might come next. Ethereum, yes, that's what we're going to talk about. Then Bitcoin, we're going to go to the God market and talk about what it's been doing, how it's been playing with our key blue levels that we gave you. Yep, that 59,500, the 55,500 levels, the 54,000, the key blue levels we've shown you on countless videos before are still calling the tune. And we'll tie that up for you and also bring into the loop the fact that you had a little bit of an uncomfortable selling off, and what I think will happen next. So we'll get to the answer there, because God market determines what happens everywhere else. And we'll take a look at one or two of the others and in passing by. Indeed. And also to remind you, actually, later we'll get a date with Richard Hart again to follow up. So the Hexicans will be happy. Staking tokens done very well as well. We'll show you the Hex chart. So we'll speak to him again. We'll speak to anybody, by the way. You help get us to speak to Charlie Hodgkins of ADA or any of the guys. We'll happily do it. So please feel free to get your contacts in touch and mail us and support in the Market Sniper if there's interesting token that you'd like to get us to cover, preferably at least in the top 25. You know, we're not going to promote shitcoins and new ICOs. It's not what we do here. But anyway, thank you. Don't forget to hit the like. That gets the video. More followers, more people, more regular content. But if you do that, also shares are real currency for us. This is a no ads channel. If you like not having ads, bang the like button right now. That's what you do if you want ad-free channel. We're going to go to the charts. Woo! That's what we do. Technical analysis. Ethereum USDT. Let's have a look at it. So there it stands above me. What a mighty series of events. Yes, and who was there telling you, buy us long Ethereum? We got some of that right some of the time, didn't we? But it wasn't always easy, but when it went going, it really got going. So that's your previous high in and around the 1400 mark and just through. And today you find yourself having traded through 4 grand and actually having touched 4.2, magical round number 4.2. Remember we did the Chinese mathematics, he said, Chinese mathematics, and we did a little bit of that, and we guessed in and around the 4.2 to 4.5, possibly, if Bitcoin was getting close to the 60K level. Bitcoin's been even a little bit heavier than we thought. We'll deal with that later. So we're around about at a very key critical level. This is why we're doing this. We're going to be showing you the FBTC. So let's get into this. But lovely rounded bottom. This is the bear market, by the way. So since 2018, this has taken a long time in setting. There's your COVID low over there. Then we started to get a little bit perky. Things like ADA was running a little bit before, even on the alt market call from South Africa. We called you alt market longs. And it started to happen with a nice little run there. Then we had a Bitcoin dominance period again. We're going to touch on the Bitcoin dominance chart today and the F dominance chart as well. Very similar, though, to the FBTC. So you'll see slightly different versions of much a similar chart. But that's the move so far. Now, let's be absolutely clear. We are in our opinion, a different kind of bull market for crypto. I've already said before, and I will continue to say, that we are in a much bigger macro environment. The adoption is going to be far higher by bigger people with deeper pockets. So we actually think the bull market, instead of being the end of year turning event that everyone's predicting, will in fact extend a little bit beyond and longer on that. And all sorts of interesting things economically will be happening. Why? Because we also understand the traditional markets, which is the death of the dollar, and more importantly, the death of the debt markets, that will be part of the heaviness of fiat currencies as a whole. We're not picking on the dollar per se, but death of the debt markets. You cannot have. And it's so interesting. In March, yes, over here, we called on our other channel. Don't forget to sub the Market Sniper. What's going on in the real world truly affects what's going on in the new horse that is pulling up for world money right here. The fact that Stanley Druckenmiller has recently come out. Yes, so let's do a bit of news before we chat. Stanley Druckenmiller has come out, and he's very heavily long gold, and he is now an inflationist, much like ourselves. Only we called the top of the bond market in March 22. He now says Bonds are in serious trouble. You have had a Rubicon moment. Now, for those that do not understand that, crossing the Rubicon means you've gone from one side to the other side, for which there is no return, typically. I prefer to use the analogy of the snowball is halfway down the hill and it's going to smash the village. It's just a question of how many tons big it is when it actually smashes the villages and what the head count's going to be. But his is crossing the Rubicon in terms of inflation, debt, and many other things. This is a key hedge fund manager, money manager for many, many years. Certainly older than me, a lot more experience than me in that sphere. Used to partner up with Georgie Boy, him of the Soros name, in the Quantum Fund way back when. So they are, as hedgies, now saying inflation, inflation, inflation. You've created so much money. So the great inflation denialists, which there are still many, and of course the central bankers are part of it. There's not any inflation. CPI remains around 2%. Yes, okay, bud. So watch that. By the way, with the UBI paying people to stay at home, wages have to go up in the States because no one wants to get off their butt and work because you can earn the same amount of money. Now you're having wage price inflation, plus you're giving free money to people every month and now getting used to it, budgeting for it and expecting more of it. So you are now, the money you're printing, instead of it going to oligarchs that just push the stock market and asset price inflation, you're now giving it to retail end users that are buying things with it. Now cars are going up, properties are going up, consumer items are going up, and I talk at length on the Market Sniper about that. But what's that got to do with crypto? Well, the whole thing is debt bubble bust. You're watching it in slow motion. It goes slowly until it suddenly goes exceedingly fast. You are going to see economic case study in fruition. It started with Greenspan, who took over from Faulkner with the easy money policies, and he set us on the path to destroy the West, and that is all part of a dastardly little plan. And in the meantime, cryptos will benefit immensely from that, and you're going to see the accelerant phase occur during this extension. So normally in Bitcoin, you might expect a similar cycle on the 4-year, end of year, blah, 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 wait till the next halvening, then it gets going again. Very, very similar. Unless there are other reasons outside in the big economy where the Jupiter's still got to squeeze into the beach ball, that is the 1 trillion market cap Bitcoin. That's when you start to have cycle extension. So people will sell too early. That said, there's a cautionary tone to this video, not because we think it's going to crash and the bull market is over. No, just because we think you might have another sell-off period and people with leverage are going to get hurt and they're going to end up selling off at the lows when they panic. So forewarned is better. So you can even position for maybe a possibility of a little bit of weakness coming for Bitcoin. But first, a rally. So we'll cover that when we do Bitcoin. But we want to go back to Ethereum, but we needed to make that macro explanation clear. So let's go to the Ethereum BTC, because this is essentially queen of the alts versus the god, the king of crypto, and that is FBTC. So without further ado, we shuffle on there, and we remind you of this chart we've shown you many, many times. So the big prediction that was made here was that this is a macro head and shoulders that requires a target to be run. And in actual fact, on Huobi, which is an interesting exchange, I don't have an account there, but it's a clean chart for me. You will see that it has in fact happened. On Binance, the targets were a little bit higher. It came quite early on Huobi. And we said to you, this huge bear market was a great period to be short all alts against Bitcoin. The relative dominance of Bitcoin was a safe trade. In other words, the others were going down. The big old bull actually was gaining dominance during the bear markets as the smaller, newer, unbranded tokens were getting washed out. That was your left shoulder. You had a lengthy head. You made the neckline 4% was the key number. We gave that to you. And then you came back down. We're going to drill down on that and show you the events behind that a little bit more. But that key target has now been made. We made that call. Some people complain, you said F was going to do well. It's not happening. They complained round about here, probably at the bottom there, after a fake break that ran out of steam on gas price narrative and pulled back before then reasserting a little bit of a stop and go. That's what markets can do every now and then. You also had complexity in this shoulder. You can see you had actually a teacup in that shoulder. So you had, and it's likely to expect that you get something similar in this shoulder, and that's what you get, complexity. So it's never going to give it to you perfect diagrammatically. That's why you have to be patient and stay on your assessment even when you get a short pullback. So we'll drop down into shorter time frames, but that key target was made. So let's drop a little bit into those shorter time frames and talk about this, because this is all going to tie into a possible softening of the whole alt trend, because this is the queen of the alt. Maybe, we'll see. We'll see. Because if Bitcoin's going to get relative overperformance, it could be in a downswinging market, or the alts rest and Bitcoin gets really strong. Not sure I'm seeing that sign. I see it as less probable. So on this channel, we called this up leg many times for you. A couple of interesting things. In fact, let's go back a bit. Let's go back a bit. Choose another chart. Choose another chart. Find that one. That's the one I want. That's the one I want. So let's cover this when we first started getting bullish with ETH with you. It was at 2.5%. That upside HVF was called by us here on this channel. That video will still exist. I don't know how many months back. You'll have to find it around about June time of 2020. And that's when we were starting to warn of alts, and that this was looking like a bottom. Looking like a bottom. You had again a W bottom. And then you had a little pause there, then you pushed out. You did come back, but you were winding up. You were winding up, and you got a breakout. And we were saying, watch for the 4%. You're going to go back there, and that could be a serious resistance again. Why? Because you've only done the head bit. You've done a left shoulder, and you're doing the head. So we think, watch it. You're going to come here, potentially from down here, this little squeezy Japanesey in there, and you're going to pop up to the neckline. And that's kind of exactly what happened. So you got what was a complex hybrid head and shoulders. Yes, you heard me say that correctly. You won't learn about that anywhere else but with us. And that's how it came at you. You got multiple shoulders, often in pairs. It does happen. So you got this event. You jumped on here. You got a 3-3 or a Masonic number. As you jumped on there and you did your double shoulder. That's actually a beginning of a broadening structure as well. That told you were getting close to the top and that you should start to fear some downside. Broadening to an ascending degree. It's ascending on a bull pole, points to tapping out. You're getting more volatile and you're not climbing up anymore. That is a slowing in pace and a rollover. In that process, on your head, you made the 4%. That we warned at 2.5. You could have traded that long. Go check the vid. It's still there. And all the bad ones. So that was part of the trade. What then happened? You sold off really harsh and you bounced on the 33. So you bounced there on the 33. You bounced there. So you're double shouldering. It bounced on the 33. You ran your 4. You came back to the 33. You had another shoulder. Guess what? You came to the 33 and you did another double shoulder in there. So you've done a double shoulder left and a double shoulder right. And in actual fact, now you're doing a descending triangle all on the 33. How many clues do you want that this was going to go down? We then said, guys, you might not like this because everyone was quite bullish, but we're actually seeing us going all the way back down to 2.5% from which we'd come. There was our funnel support, target into our funnel support. You can run all the way back down. That's the next layer of trading. People were like, nah, dude, you're such a bear. You're such a boomer bear. I'm not a boomer, by the way. I am Generation X, a proud Generation X of Sigma status. Anyway, even to further add to that particular scenario cast, so we're doing the history. This is really kind of important because then you understand where we've been, why we've been there, and how and why it happened. Let's just get back there. Inside of that, by the way, floating on your 33 level, you didn't fall straight away. You set up, wait for it, an inverted structure, which was clearly now in a bear trend coming off this descending triangle. We said downside, you're going to get an HVF. Yes, an inverted HVF to take you down. And you've got a head and shoulder target, so you're getting overperformance, which is exactly to be expected because it's the first HVF in a new trend, which is to the downside. And you got your RH3, you got your RL3, and down you go. You make your HVF target, and then it looked like it was done. It looked like it was done. If you'd held on, you would have been in a little bit of trouble. But little did we know that the markets always have a plan for you. And in actual fact, that head and shoulder ended up performing to its target. Smash. There it goes. There's that target, and it ran that funnel. Boom. It done. Double bottom. Very quick and rude double bottom there. Whoever needed shaking out had clearly been shaken out. Descending triangle, by the way, there after you've done that. Double bottom, boom, and you smash it back up again to these 33 levels. See, the 33 level was a key level. In between the 2.5 and the 40 was 33. So if you do your math carefully, it's roughly from 2.5, it was 2.5 and a bit, 2.5 and a half. We're around 7.5 there. 33 and 7.5 was taking you to the 4 levels. So you can see it was a perfectly natural midpoint, and it was the neckline for that double-shouldered head and shoulder. That's all you ended up going to the downside. All these videos where we were saying careful, it's downside for Ethereum, still up there. So we were riding the ebb and the flow of this market on the long and short. You wanted to bias Bitcoin during that period. Bitcoin was doing rather well. Remember, we were running our first cup gold nugget targets. Everything was going so swimmingly, and we were heavily long Bitcoin. And Ethereum was as relatively underperforming. Then we squeezed in a rising wedge back up. We're now back at the 4 level. This is the first shoulder visit to the 4 level. Beautiful, but it was in a rising wedge. It was warning you, we're getting a bit tired. So what did it do? It rests, and we wanted it to wind up and form an HVF there. But no, it didn't do that. It made a marginally higher high. That's fatal for us. It made a marginally higher high. See him there? Oh, he went a little bit higher. That's no good, because that means you're now broadening and you're failing to create a wind up. We don't like that, especially on our 4 level. You dipped back again under your 4 level, and next thing you knew, you were back down at your 33 levels. See that? This funnel right there, right back down. So Ethereum came right back down. That was our fake break. Now with all our breakouts, and you'll learn that when you do an HVF method course, you get the feign and break, the breaks and then feigns back in. So it does a false trigger, it does the trigger and then it comes back in. It's testing the line. It's kind of like a child just checking the laser beam there. I mean, I had to check it, ding dong. It's not really running for it just yet. And people get thrown off. They get discouraged. They think, oh, we're done. It was all wrong. Remember, you had complexity on the left shoulder way back then. Bottom of the bear market 2018, coming down in that first bounce. You went to that neckline twice in creating that shoulder. I told you, cup and little handle in there, little teacup thing going down. So what's to say you're not going to get the same? It's very typical pattern repeating. Once you got to these levels, then you were truly in a very strong place. And we gave you the breakdown on these, with all these succession of upside HVFs that then began to occur. And this was more recent history, so we can drop time frame. This was your full and final break of that neckline in terms of that journey. And I am not thinking you're going to see that again unless we have a major bear, nasty sell-off. But who knows? I think Ethereum is going to continue to nibble, but first, we might need a rest because big targets were made. There was the 6.3. That's on Huobi. It was a little bit higher on Binance. And you actually got a wind up HVF. You see that over there, squeezy. So you get a little bit more. As you get close to your target, it says, okay, I give it to you conservative first. When we get up there and we still got a little bit of juice left in the tank, we'll give you a little bit more when we know, once we've seen how the journey's turned out, how it all worked. We gave you this one over here, first HVF1. We said we think we're going to run and do the triggering event for this inverted. This was not long ago. That right there. So this is all about Ethereum. This is all about the queen of the alts. We said, here we go. You want to go long here. And you would have got a succession of upside HVFs. I often get people saying, oh, how many HVFs work? Here's 4 in a row. Is that good enough for you? With multiple R's in the target and single R's on the risk. How does that work out for you? Do you think you could have made some money? Just asking. That's an example. Why? Because you got the trend and the macro analysis right, doing 360-degree analysis, going to the big time frames and saying this is a secular bottom. And you're going to have real zip when you properly get going and not being discouraged when you get the first fake break. That feigns back in and shakes you out. And you take the loss and you go and do it again. Because when you win so big. So I sat with collateral all in Ethereum. And I went 3x bull Ethereum. And I traded perp contracts, long Ethereum. Ethereum has rained cash on me. Did it rain cash on you? If not, it's because you don't have the confidence, you don't have the method, you don't have the conviction, and conviction can be a dangerous thing, the rationally justified version of conviction to make the trade. And that's what you need to learn. And that's why we're here. And that's why the link below says click and book a call. And you too can have a chat to other traders just like you and ask, is this a transferable skill or is he a guru? I'm not a guru. That's your clue. Anyway, repeated HVFs, up you go, up you go, up you go, target made. No new clear structure. Now, long term, I still expect this to go up. And this has not been overly volatile. The Bitcoin sell-off was largely shrugged off for ETH. So I can be wrong for a bit because I've largely taken my ETH off the table. I currently just want to get square and play defense. I've done really well. Let's take a breath. It's been intense. You know, checking your things, balancing everything every night, going to sleep, hoping that nothing major's happen the next day. It's kind of nerve strategy, especially if you're leaning on something pretty big. So that sell-off was almost larger than the recent sell-off. So Ethereum still didn't wet the bed particularly hard when Bitcoin sold off. And that which it did, it rallied and took back quite well, whilst other things are looking heavier. So that is the story of Ethereum so far. The longs, the head and shoulders with multiple shoulders shorts, all the way back from 4% to 2.5, while Bitcoin was pumping, which was a Bitcoin dominance period. Let's have a look at Bitcoin dominance, because this I've not shown you yet on YouTube, and this was being discussed in our premium community all the time. We highlighted that this was going down. There was inverted setups all the time in Bitcoin dominance. Right the way up top there. We'll get out of log scale again just to make some sense out of that. We had an inverted HVF over here on dominance and it was coming down. So what are we showing you now? Well, it's kind of flat now because I've got a lot of price action in it. Maybe if I just took what happened next out of the picture view, you can see that structure a little bit better. So this was downside continuation. That was an ascending megaphone on a bear pole. Downside continuation. There it was. Bear pole. And so you were going in and then you made this structure. That was a key bear. And you were holding that 61.5. It was a key level. It was a key level that had shown us a key level previously on the history before. You want to see that history? Sure, I'll show it to you. So 61.5 was as key as the double topping at 72 was. Yes, you had a double top at 72. Let's put a bigger time frame on that. Let's go to 8 hours. Show you a little bit more of that history. You see that? You see that? That is almost like Bitcoin dominance head and shoulder. See how you pumped there, then you sat on that. You see how you touched that before you went up and then squeezed for an upside. And then you were down here again. And then you set up. Funny that, 61.5%. And the other time, 72s, we touched 72s twice. 72, 73, 74s was a key level. This was starting to show weakness for Bitcoin dominating the others. Let's have a look at it. Here. Go daily. So we're doing a dominance deep dive. This was, by the way, when we were very bullish and we were going, Bitcoin is the boss. You can see those two highs, very similar. Again, a key level there at 58 because you had falling wedge there, you had it over there, and you had it here, a target for the inverted. So that was your dominant spell. Now, it's almost like 74 from 58. It's kind of, what's that? That's about 18. 20 would be, no, 16. 16 from 58. You help me with the maths. You should be at about 42%. So there's probably a possibility that this M top, and I'm just spotting this now, could project right down to 42. So you're in and around 74. Not quite 74. You're kind of a 73 actually. 73 from a 58. So you're 5 less than 20. You're 15. So 15 from 58, you're at about 43. So you maybe I've done a disservice there. You're at about that potential downside, and you've traded 44. So actually, you've got a huge double top in Bitcoin dominance that's probably just about made target. I've just done it very rough cut with you now live, just to show you those two previous highs. Key moves. Have you noticed when you're inside inverted HVFs to the downside, things just spill. It's even easier trading than on the long side. This was down. And there were setups along the way. Were there setups along the way? Yes, sir, there was. Here was another one that we're on the 4 hour. I'll drop it to the 2. So all this is saying alt run. Let's try that again. Alt run, target made, and you're in overperformance. Down. So when you come out of our overperformance bands, also known as a slide, HVF slide, you can find out about that. Book a call down below. Click the link, book a call. Learn how to trade so that you know when to call time on it. We're not quite there yet. We haven't broken out of those bands yet, but it's starting to slow down. F might slowly lose some of its momentum. Let's look at F dominance, which is kind of like FBTC, but a little bit includes the other alts as well, so slightly different. Now we needed on that one, we needed a 18.96, 19% target, and we had a key level of significance at the 20% mark on F dominance. So let's see why. That's a little bit too much. Let's go 3 days. There you go. So we've highlighted where it's been really significant before the 20% mark. Here she goes, here she shines, there and there and there. You've got a lovely little inverted there. That's actually a left shoulder to a mega spike Empire State head, to a right shoulder with an inverted HVF in it. Take it from me. I'm not going to drill into those. That's resistance. And then you have your huge dip and you have your other level there, a test there, coming back. And then you've got another mini head and shoulder in the TG pink, left, head, right. We'll drop a time frame. All as part of this reversal head and shoulder. So this has been why the Ethereum dominance has been prevailing, because it's been in a reversal. Where are you right now? You are here. 20%. 20%, he says. And you just enjoyed, if you were listening, that move. Who likes charts that do that? When they're in it with a 3x bull token and leverage on futures and all your collateral. Anyone? Do you think you'd make money? Do you think you would make some money? I hope so. I think you would. So we'll also checking your comments. I'll move across and have a little look at your comments, but I just want to give you the overview. We'll drop a time frame and just revisit what happened and how it turned down on this. And then you will now have the full understanding of where we've been and why we are where we are, and that we're also at a little bit of a level where it's possible and reasonable potentially to think you might take a small break. See that? See that first test before you break? See that? That is left, that is head, that is right, and then you got a little cup and saucer as part of your right before you went. That was it. Then it was up and away. HVFs along the way, even on F's dominance. Those targets made, head and shoulder targets made, key level of significance 20%, round number now made. So should you be going leverage long F now? Yeah, less so. So I think the whole quick bit is going to slow down. That doesn't mean it might not continue to go up a little bit further. We're looking for 43% on Bitcoin. So somebody's going to keep moving still against Bitcoin. But I wonder if Bitcoin isn't also going to bring a little bit of a surprise now on us. It's all been straight down Bitcoin dominance. Be careful. Don't go on forever. So that was Ethereum. Any questions regarding the Ethereum dominance? Let's see. We got a nutcase in the comments. That's the usual in the world. Your gold and silver bull too. Yep. Welcome to. Nice to see. Espiller incoming probably, says the Great Closet. ETH will flip. Has it going deflationary? Bigger use case than inert digital assets. Do ELROND next, says somebody. Cancelled my work meeting to see Crypto Sniper do chart analysis. That's a smart man, Mohammed. Yes. James Thompson, hey, hope everything is well. Hey, James, how are you doing? Good, good, good. Okay, so that is a little loosener bit of technical analysis thrown at you on the Ethereum market. Let's go to the God market, BTC. BTC, what might he be? And I won't scare you with that one. I'll scare you with something else. Let's do that, or is it that? So remember, it's never good to panic sell just after you've had a sell. What typically happens is you normally get a walkout rally. So what have we said on Bitcoin? Let's cover that. We've thrown down some key levels at you. I'm going to make them fat again. 59,500, 57,000, 54,000, and 54,000, we reminded you, is the 1.618 from our first cup gold nugget projection of target. That saw us do 27,000 and then continue running. And we have highlighted to you a couple of times that the progress is slowing. It's taking more to move this. We had the rising wedge. You smashed it. You came down. You set up an inverted HVF. We said further downside, downside again. And then here we said you want to start thinking about getting long. Everyone was terrified at that point. We got long, and we got long crypto alts, particularly Ethereum, but also others. Binance token we've mentioned. ADA was in there. XRP was in there. A couple of tokens that we've traded to the long side, and others, including BTT, etc. You walked up. You stalled in the funnel. You did a falling wedge there. You had a little dip out the bottom before you went up higher again. People were afraid again there. You went higher. Now, where are these levels? Note, you've just twice touched our 59,500. Neither of them ran. Neither of those ran the 60K, but they did bounce between our key levels or blue levels that are on there. So we're in little boy blue, little pippy blue, we should say, for the drawing today. And this has all been a big pivot around the 55.5. And also this funnel has been a little bit of a key area. You're trading right in it now. So what's going to happen? Well, you could sell off again, but there's a slight risk here that I don't like. We don't get wealthy by trading head and shoulders, particularly unless we're really confident of a turn, or we've got a first setup in a new trend. There's usually an HVF involved. That's why we have hybrid head and shoulders. You also had a reversal to the upside here. This target's not been made, to be clear, because you're around 47K here, up to our midpoint over there at about 55. So it's about 8,000. You needed about 62, 63. You see these targets over there. That's not looking like it's on in any great hurry. And more rising wedges. A break. What you typically get after a break of a rising wedge is a little bit of a return move. Back up into this funnel zone. So you don't have to panic sell now. Oh, Sniper says the market's going down. He says something's brewing. We chose the word brewing. It doesn't necessarily mean it's ready. The little witches are stirring the ladle in the pot. There's something potentially brewing. It could be served up soon, but typically you get a chance. Typically you get a chance and you get a walk up of some sort. If we run higher than that level, we're probably going higher than the right shoulder. What's that level? We can tell you in numbers terms. That would reduce the risk. But until you do, you're at quite some risk of a sell-off. 59,000 is the high over there. So it's just $500 short of our big blue line that we've given you many times, 59,500. You've got a double top in that. So I'm going to drop a time frame and show you the more recent price behavior on this. Let's go back to that one. Is it that one? And let's drop the time frame. So we're going to go... No, it's not that one. It must be this one. That's the one. Okay, so that's the one we want. The perp now, because we were trading it. So quite a few rising wedge structures. So the first one happened here. That was very steep. And we were squeezing. The wick selling. You see the wicks there. Wicks, 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 wicks. All at 59,500. What happens? You spill out of your falling wedge, you support on a funnel and also the big legacy other funnel that was in the significant range, and then you have a snapback buy. Where do you run to? Back up to the 59,500. This is almost a double top. You do not trade 60. Everyone thinks the round number's key. I've told you 59.5 many times. 55.5 is the other key level, and you're sitting on it. You're creating a continuation pattern in and around the 55. You supported on it last time. It was almost a neckline for you there. 55.5, we call it the SO level because of all those S's in there. Anyway, so that M double top like that, bouncing on that funnel over there. So if we just look at that one, the double lines, let's get the others gone. We have a special way of how we draw for that. And it was made, believe it or not, by a flea's testicle hair breadth. Right there. You'll note we projected from a unique place. You can learn why we do these things. You can book a call. That was a great sell-off on the double top, where our neckline was. That's a performing double top at the place where we are technically at a larger head awaiting maybe a possible right shoulder where that is the left shoulder. So there's a little bit, it's a fractalized, it's not a cyclical top, head and shoulder. It's a fractal of a bit of a rally. We did say it's not going to be strong Bitcoin. It's going to be what we call a walkout, a stroll off the 47K lows. Listen, we went up to 59,500 from 47K when we were talking to you around here. So it's been a stroll, but it's not been dominant. It's not been a pump. It's been a stroll up with many regular sell-off. And now that sell-off is setting up that all around the 55K. The bad news, because most people only like long-only markets, the bad news is if that does turn out to be a left shoulder and a head, and we get a weak rally into here, a right shoulder, the downside from there will take you to 48, very close to the lows here. That would not be helpful. And possibly you overperform to that. Remember, head and shoulders, it's not just to the target. It can be a cyclical turning point and you go low. Possible. The bad news. But we don't get wealthy trading head and shoulders. I don't stake my reputation on head and shoulders. Bitcoin is such that it can, at its most bearish moment, when everyone thinks it's going to do a head and shoulders, come back down and then just do a vertical pump out of that. And you end up, let's change colors, you know, with something like that. And you get a major move because everyone's max bear. So I'm just putting it out there to you. Little bit of a warning now. It's struggling with this 59,500. And it keeps being sucked back to the 55.5. Which is where it had that inverted. There's that blue line. And it rallied back up there, then back down. Came to the 55, sold off, falling wedge. You know, it's kept coming back, double bottom, 55. So we are in a entrapment zone that is in and around the 55 and the 59,500. We're getting a little bit exhausted because the buyers keep chasing dips and spending all their ammo chasing dips on grind lines. So we had a big wedge there. Let's get the face cleared again. Dip chasing, big dip chasing there. Led to a spill. Plenty dip chasing on a longer level along all these lows has led to a spill. So will this be a continuation downside or will you get a little walkout move up? We will see. We will see. So in terms of having had a great run and maybe psychologically just having a bit of a rest, my disposition is to distribute any positions into any rallying strength here and just occasionally get stablecoin neutral to the market and see what happens. Quite likely, as I say, you could be totally shocked. Some news comes out and we get a pump. Because the dollar is fading. This is the macro bull of all macro bulls. But equally, there's a little bit of risk off in the tech market. There's a little bit of seeing a little bit of pressure coming in on the silver market. So this is market sniper opinions. There's Palantir, we got a downside. By the way, isn't it funny? Palantir rushing to say that they take Bitcoin for their products. We've got them short. They look stinky as all hell and they're going down. The new tech equities game is to suddenly declare that you're holding Bitcoin and that you will take Bitcoin for payments. That should mean you get a 3x on your tech stock. I'm not sure it's going to turn out that way for them. That smells of desperation, especially as you're not the first. The later you are to play that card, it's going to whiff of desperation. I'm going to be very interested and I'll be watching that space. So they are the most recent to say, we take Bitcoin. We may be holding Bitcoin. Ah, good for you, greedy bastards, trying to get a sneaky pump out of nothing. You're going down. That's them. But anyway, that's a little bit of crypto stroke equity news. So some of the news is merging. The traditional markets merging into the crypto sniper markets. And that's why we get a little bit of this cross-referencing. And it's interesting and it's useful. And you should embrace it. Because we do not exist as two separate bubbles. The same humans that are in the one are also in the other. Same emotions. They lose money there. They're in pain there. It matters. Let's have a look at some of those comments. How are you guys doing? So alt season has had a very good time. The other thing is when you have peak meme token becoming fourth largest crypto in the planet, and you've got, who saw Musk on the Saturday Night Live? Bloody cringeworthy. I don't watch that program, but someone put it in front of me. It was absolutely embarrassing, rolling out his mom and trying to be funny. And then Doggy, just to show all full due respects, tanked on that performance. And he is, of course, the Twitter followed created hero for the masses. Your created hero who's saving the planet. Where's Doggy? We'll do a little bit of TA on Doggy for the Doggy fans. Who let the dogs out? Where's my dog gone? Yeah, I want to show you that one actually as well. That was a really nice setup. Show you tell. Cheeky little small setup. You need Uniswap or you need to be on some obscure exchange to do it. There's Doggy, damn you. So it's actually been highly, amazingly, when people are accumulating a token, it makes a lot of HVFs. It's been highly HVF compliant. It's been highly HVF compliant. And what you got now is a little bit of a basing descending grind line and almost a little bit of a falling wedge. So actually it's not so super bearish for Doggy. I think it can go a little bit back up again. But it did make a big target. How's that for fat Koki? I love a fat Koki. Especially in TG pink. Yeah. Over there. So that's a bit of a falling wedge. May actually survive and fail to make a new low. So let's take those ridiculous lines away and draw sensibly. It didn't make a new low there either. So a little bit of a interesting structure. I wouldn't trade this on its own, but it's interesting. This could bleed up. This is another reason. Don't say he's called a crash and it's meant to happen now. And then say, look, the market's going up. You're so wrong. We're expecting some degree of rally. And potentially with Bitcoin can be totally destroys head and shoulders. There's plenty of instances with Bitcoin where you have something like that and it just does that. So, but right now I'm not feeling that surge power and I'm feeling a bit more risk off. So I think there's a higher risk. That's not a call. I just think the probabilities, you know, if something that's normally a 5% risk and you're trading alts suddenly becomes a 25% risk, that's still not a probability that is high, but it's higher. And the upside is now no longer as hot because it's already moved a long way. That swings it all a little bit more that way. So I get square and I wait and see. I wait for new structures to form. So that's it. What happened to Binance? We were big Binance bulls. Yeah, let's explain what happened to Binance. Let's go have a look. So it's done pretty well. And actually it's rallied pretty well out of this. And I still think there's a chance it's going to make its 718 target. Don't forget you're long at 515 down here. That's assuming you weren't in the previous one before that. But it was not, the second one was not as pretty. So this was the first one. It ran up to 640 and then came down and set up. That's assuming you were not in the first one. Look how well you've done. And it's rallied quite nicely. But again, it's not the most beautiful structure. It's gone and done a little bit of an udder pattern. A little bit of a double top. A little bit of a ledge. I don't know. Ledges after big up moves, you could still have a down leg like this, and it depends what Bitcoin does. Or it can just finish in a hurry. But it did run out of time, so I closed it on its failure on its time stop. So out of this trade, I did that. I made that, and I'm very happy with that. So I no longer have a big exposure. I have a small amount of collateral still in, which I'll close at the 718, 720 level. But I'm happy with it. It did run out of time though. It hadn't finished. And then the Bitcoin sell-off came. So it's very good. It's very useful to have a time stop. How do you know? If it doesn't hit your target, doesn't hit your stop, you've got to have a point where you say, hold on, the initial energy that was created for the setup has now dissipated. When do I close? That's something that's called a time stop. You can learn how we do time stops properly by clicking the link below and learning how to become HVF member. Then there's Hexicans in the audience. Where are the Hexicans? They'll be talking up. So I better of show them. The Pulse talk is getting interesting with what Richard's going to do. The gas prices are getting way too high. Try to buy 0.8 Ethereum's worth of Hex. $191 to submit in gas fees, to submit an order entry. And I couldn't, sometimes you have to flip your ETH into wrapped ETH. And that costs money to do one ETH into one wrapped ETH. And then to buy with wrapped ETH so that you can use a limit order to buy a Hex. Outrageous. That's two separate events that you will be charged hundreds of dollars for. So the justification for Pulse or any other initiatives that deal with the gas fee charging issue. And as much as Ethereum's 2.0 is meant to deal with that, they sure has taken a long time sorting it out, and it ain't done yet. But they're running. So that is done exceedingly well. This was one which we got right. I got in at the 0.8, so I was accumulating on the low slung part of the HVF. I never sold out any there because it didn't make it. And then I started to hear the Pulse story. So I've now done overperformance bands. I took just my initial starting capital out and left the rest in. So it's a safe bet for me now. Nice performance from the Hex on there. Staking is also accumulating tokens. What other tokens should we have a look at? I said I'd do those two. We showed you Binance. ELROND, the one gent was asking. We haven't had much to do with it since a while ago. It was looking a little dull. So it looks quite similar to XRP. Never did our target we wanted for it. I think it got off too late. It needed 275. I was glad to get out of it up top here. Still got time in terms of this, but it needed 275. But this was, that looks like an invalidation there actually on the sell-off there, which is why we would have distributed it. Pretty convex, sold off a bit there. That's disproportionate. I don't think you're going to get a good wind up out of that. I prefer, if you like that kind of pattern, I prefer XRP. Look, it'll recover and it'll walk out and you can get out of it. But there's quite a few pattern structures that haven't performed. There was a tiny little wind up there. Every time Bitcoin shits the bed, it dies. It's run two pattern structures. So, you know, that's not trustworthy. It needs to have some balls and a little bit of spine and not die so hard when the other things are dying. That said, it's done well prior to this. Others, surprisingly, recently got strong. It was a bit of a limp biscuit, but it's actually shown relative strength. If you look at others sell-off there, and it's taken 80% of it already back up. That's showing a little bit of relative strength recently, since this phase. It was an absolute wuss here. Every Bitcoin sell-off, it spat down really hard. Failed to make a new low like Bitcoin. Bitcoin made a new low here. That's when it was starting to show relative strength. And then, so there it goes. It's back in season again. So actually so far, but it's still, if we keep getting attacks, it will sell off again. And then you might have a left shoulder ahead and a right shoulder. You've got to watch out there a little bit as well. So at the end of the day, it's not going to hold back the tide if the others are in trouble. How about privacy coins done? Not bad. I was going to show you XRP. So if you like the ELROND structure, I preferred where XRP is, put a much better second impulse in. So this would be a great one to trade. I still think another sell-off would be nice. Bring it down somewhere here and then set that one up. That would be beautiful. Kind of half hoping that will happen. And that could be a big, big move. And they've got court news due, stuff, stories. I think they're going to get lucky. I think it's in crypto's overall interest that they get a little bit lucky, if I'm frank. Even though, I've made a career out of talking smack about them at times, but actually I want to see them win that, and I would love to see this pattern take off, and that would be a great setup for us right off the charts, yeah? You'd be well through the $2 a mark, deep into the quartile, would be quite nice. A little bit more selling off and basing out could do us quite well. In this funnel level, we had an inverted there that made target. You can go and see it again. That was your little spiller, and then you had a double bottom. That made target, took you through the HVF. Then you had that wind up. That was a great gift. I traded that and got long. Mini head and shoulder in there, down. Back down here, back up, marginally higher high now. Weakness, falling wedge, flat bottom. That was a little inverted. We drew it. You traded down. Rally down again. You've run through that funnel. Then you rallied back up. But you once again took through that. So quite a lot of interesting trades going on here. But for me, I'd like to see it come down somewhere here and then start basing up. So I'd prefer Bitcoin and Ethereum and whomever that wants to fall to get it done soon. So we can start the recovery process and then we can get set up. Some guys were saying, well, the sell-offs are getting smaller, things like that. We almost need a little bit of a deeper cut to have the deep blood, fresh deep blood be bled out. And then you can clear the woods and you can set up structure for new upsides. Let's see what else you guys have got for me. Are you clicking those likes? How many have we got? 533 watching. Delighted to have 500 of you in the room, plus 33 Freemasons. Thank you for coming on. I am your centurion for today. I am your 5 centurion, showing you the technical analysis on the crypto markets. We've shown you Bitcoin. We've looked at XRP. We've looked at Ethereum. We're saying to you that at 20% might be a good resting point for Ethereum. That doesn't mean it's looking bad. Ethereum doesn't look bad, but it can just get a bit stale and churn about a bit. Maybe make some marginally higher highs and you think this is awesome. We're walking our way up. But then it kind of gets a little bit toppy here. You see a bit of a selling wick here on that Ethereum. We talk about key inflection points. This was an absolute gift. This guy over here. You'll learn about key inflection points. Look at that. That was absolute beauty. I was highlighting it to our premium guys. So this is when you get essentially a rising wedge, but it's so dominant, the buying coming underneath this. Here, let's grab the arrow. Buying, chasing up the dips. That's, the likes of Grayscale that need everybody's investing. And you actually bleed out the highs. Remember, I warned you guys that this is classic support and resistance trap. As soon as you buy the new high, sell off. You buy the new high, sell off. So it's a dangerous trap. Then you actually set up a structure where you didn't make new highs. You squeezed. That was so beautiful. And you got a lovely little final micro squeezy going on here, leaning against our capping descending grind line after you fail to make new highs. So when you're making marginally higher highs, you're just squeezing up in the wedge. But when you start failing to do it, you start to wind up some pressure. You're building pressure. So there's pressure across the top. And they're squeezing along the bottom. Then you suddenly go, boom. That's great. Then you go into another rising wedge, which had to have some bloodletting. And then you had quite a big bounce. Just, yeah. A lot of the bid stack was tested there. You went right down to 3.6 having traded for 2 plus. So it's quite a few hundred. So a little bit, yeah. I'll leave it and I'll watch it settle. I'll see how we settle. And I'll watch what Bitcoin does. So to the people of India, congratulations. Don't believe everything you hear in terms of the Maxine. The lady Maxine. The magnetic lady Maxine. That, magnets might start sticking to your shoulders just now. Great to hear from all you guys. Divi 20% ROI, Masternode, says James B. Arrow enjoys and says legendary TA. Cake USDT. Please look at it, says Patrick Romero. Okay, we'll have a look at it. Say again? Ah, it's our community member. Of course we will look at it then. God bless our community. God bless the snipers, the truth seekers. He spoke so politely, I had to do it anyway. I should have known he was a community member. Real quality gents, men of great achievement. The legends of the sniper community. They're going to be building a statue to me when I die. They're gonna put a couple of jokes there. They're gonna put an ice cream cone mashed against my head because of my dyslexic tendencies, autistic dyslexic tendencies. This is what I've ordered. I hope it's not coming too soon. Best stop talking like that. Yep. So falling wedge into bit of a channel into a slip. It looks a little bit soft. I think, what was the name again? It was it James? Patrick. Looks a little bit soft, Pat. Big move, done real nice. If you were in it, well done. Little bit of broadening there, which is continuation when you're on a bull pole. Then you came off. Then again you broadened, which is again continuation. You went up, and then you started to get a little bit lower, falling wedge, and then that's all you got out of your falling wedge. You got a bump, and then you crashed it down quite ugly there, and that's quite a flat bottom. So I would not be in right now. I would not be in. I'm not confident about that. Short time frame. I'm on a 4 hourly. A lot can change in a couple of hours. For now, as we stand, more chance of breaking this lower, slightly ascending, basing ascending grind line, the Badgel. Yep, what else have we got? A gentleman and a scholar. He was indeed. So politely he asked. He was going to get served anyway, but even more so when we found out. He's one of the chosen ones that shoot us straight and accurately. It's a special soldier that becomes a sniper, I can tell you that. I think we're done, guys. I just want to highlight to you one thing on the dollar, which is going to be a bit of a tailwind for Bitcoin. It is in crap. The truth of the matter is it's in real trouble. So that this is a traditional markets thing, and you can get more traditional markets if you remember to sub the Market Sniper channel if you're not already subbed there. But this is the dollar. So it's been in a falling wedge. So we highlight this, the macro, this blow off top into COVID. Help, help, help. Sell off, sell off, sell off. You know the story. Sell off. This has been, people forget how much of a tailwind this has been, that the big macro fiat is dying. Now, what's actually happened here is in the last sell-off, we set up a very clear megaphone. Before that, we were creating a rising wedge out of a falling wedge, which means you're going to have a sell-off. You had a sell-off. We said if the sell-off comes all the way down to this basing ascending grind line, which it did, it said we're going to go lower. And we expected a rally, even as high as the splitter. It couldn't even get there, and it just sold off. And this blue line represents the last low some time ago. You'd need the weekly chart to do it. I won't go there to bore you, but this is weak dollar, which is generally very positive for anti-fiats. Dollar bad, positive for anti-fiats. Click that back. Standing up. So What do we expect to have happen? This should be supportive for silver and gold. More of that on the market sniper. Should be supportive for the inflation trade. The big long. Remember I told you about the big long? Or even better, the big schlong. You're going to get reamed at the end of it. But that's the game. You got to be long. You got to be long. And retail traders can buy, find it easier. So that is the big opportunity for you. And the dollar index is looking weak. So it could come. It might not break the blue line, but it could start coming and threatening a bit lower. That supports all cryptos generally. But there's also a little bit of risk off the things that have been running. The tech stocks are looking a little bit high. The inflation plays are playing well. Where's crypto? Well, crypto has done a lot. It's kind of caught up with tech. You know, Bitcoin, 10 grand. First cup gold nuggets-ish break, 10,700. The second most important HVF, that little, and then it's gone nothing but up. From 10,750, we find ourselves at 55,500 at the moment, thereabouts. So that is a big, big move, 5.5x in a single year. So that is it, guys. I think you're going to have continually a tailwind, but suddenly you get a risk-off moment. So watch out for this summer. This summer, I have a feeling, I don't want to get too reset on you, but that the inflation talk is starting to win the argument. Too many things going up. They might smash the inflation trade with fear. How do they bring market prices down? They get everyone in a panic state. They do their global hack that Klaus has been talking about. Whatever the hell they want, they pull the big fear. They do the lockdowns, summer lockdowns for the Northern Hemisphere because of the Indian, the Brazilian, the Mexican, the South African version of whatever. And the vaccine, more vaccine is needed, new vaccines. And you might just find everything gets a little bit scary and the tech sells off, then the inflation trade risk-offs happen, and what will happen to Bitcoin after quite a lengthy move. That could then bounce the dollar, get it a bit of a respite. They've got a real problem. The Fed is buying 60% of their own bonds. Nobody wants their debt. It's over. The debt experiment is over. That's why we have to remain long-run macro bullish the crypto environment. The debt experiment is over. They are going to crash that system and end it. It is over. They are monetizing debt. You could never have 4.95 interest rates. Druckenmiller did the numbers himself and told you you'd be paying 30% of all tax revenues just to service interest. He said that's how much they spent on COVID. It's like having a new pandemic every year. Unbelievable. So it's not going to happen. It will fail. It will fail. So we are in the process of failing. That's why this is not a short call. It's a case of, you know what? We might have a rest. There might be an event. But after all that, we want to be back in there and we want to be back long on the crypto sides. And other areas can get your attention, such as oil, all the other places and the other things. That's what we do, 360 degrees. So when that short period of rest in cryptos, don't really want to short it too much. It's too risky. Go and play with your toys somewhere else in a market that's also going up. That's it. Okay, guys. Gas stations running out of, by the way, thank you for that point. That's Nunya Business. France's gas stations running out of gas in the US already. Absolutely the petrol long. So I want to just tell you guys that are crypto-only traders or crypto-only investors. We shorted Plains All American in just prior to the COVID trade. We had a huge inverted HVF. I will shock you with the narrative. Those that are long watchers of our channel will recognize this. This was up. We took a very early entry, just sub the $25 on that second high there, and we traded it down to sub 3.2, target made. That was a COVID trade. We didn't know it yet, but that's what it was. That was a huge sell-off event that got us down to 321. We are now currently long Plains All American pipelines, because Colonial Pipeline, the one that runs all the way from Houston, Texas, all the way along the Gulf, all the way along, and then up the East Coast, right the way into New Jersey. If you're driving in a car in New York, if you're flying on a plane out of an airport in Gardier or any of the airports, you will be getting fuel that has traveled in that pipeline, has been shut. Guys are telling me now, my American friends here in the points are saying, yes, it's closed down. So we are now long. HVF method gives you this. We are now long PAA in the opposite direction, a pipeline country. We are long oil. So these are the things the method can do for you. It gives you the news before the news. We were talking about this in the community before this event of Saturday happened. Before it happened, how did we see that? How do we know? Are we Nostradamus? No, we just have a method and we have a trade. If it's setting up, there's something going down. And that is the wisdom of markets and probably insiders that are showing you with their buying and setting up structure. So on that positive note, you can apply that to your crypto. You can also apply it to other markets in the meantime. So in this period of big long, we're here to help you with building your wealth in reset season. And if you wish to take it further and join our community, you can book a call below on the details below. Looking forward to get to you with Richard when he's ready, and we'll get his take on the crypto market when that date arrives, and also what he's doing with Hex and Pulse for those of you that are interested. Okay, till then, I salute you. Goodbye. We'll see you in the ether.